let me start. And yeah, this is recording now. Well, I think we're gonna have, I'm just gonna be able to be here until 10 because I have another meeting after that. But I think we have enough time to discuss the assignment. And anyone who would like to share a spiritual thought pretty quick?
It was for another class, but it was something that I thought it was kind of thought provoking, and it kind of, I forgot the scripture reference that they referred to, but essentially it was about practice. It was this piano player. She's Mormon, and she was TED Talks, and she goes, "Perfect practice makes perfect," and it was just making me think about, well, what is it that you're practicing? You know what I mean? And specifically, it's like, okay, when you get, stressed out or something's hard, what do you do? And that's what you're practicing. So for me, it was like, the expectation for us is be therefore perfect, right? And the best way to do that is practice being perfect, right? You got to perfect practice. And so, at least for me, what I was thinking about was when things get hard, what are you doing? Because that's what you're practicing to be.
Okay.
That was it.
Okay. Thank you, TJ. Before we start discussing, I'm going to take notes about this because we need to vote as a group, and we have to vote about whether Duke should accept the offer or not. So how many say yes?
Oh, the turn offer?
The turn offer, yes.
I said that I would negotiate and do what you could with that, and that's something we talk about them negotiating another way. I think there's room he could have negotiated, and I think he could have got a bit better offer. I mean, that was just kind of thrown out there.
So what is your point of contention then? What would you want out of the deal? What are the parts that you don't like in the deal?
In the deal?
Yeah.
Well,
not in the turn deal, but with Shields.
Well, the first thing is he did not want to. He didn't seem like he cared to run a company. He didn't want to be. He wanted a product out there. Is what he was trying to do.
That's what Kozman wanted.
Yes, and this is all about Kozman right now.
Right.
And so,
my question is, so that deal to bring in Shields or not? You said he could negotiate a better deal, right? Is that what you're looking for?
No, I said he could have negotiated a better deal with Turn.
Oh, okay. So you're leaning towards Turn.
Yes, I'm saying that they talk all about Kozman. I think about the deal with Shields. I think he could have. Turn just said, "Here's $2 million or $4 million."
But in this case, Patrick, so you mean that, I mean, if you want to discuss or negotiate that offer, so you mean that you would accept that offer, right?
Yeah. So
yes, I think they could have come to a point.
Okay.
Because based on what Kozman actually wanted, what I get from what he was wanting, along with his wife, he was talking about that he would be set. I think he could have gotten more for that. For one, he could have, but we're looking at it as it is. But yes, I think that he could have done that and negotiated where he stayed on, and done that, or even done some sort of licensing. My thing with the why in my assignment, I put in that I think Kozman should have, if he's going to look at pursuing with Shields, he needed someone to negotiate on his behalf. He should have hired a third-party negotiator because these others, I think that he was, I just didn't trust any of them. They were all kind of buddies there, and it seemed like.
Well, he did have someone negotiating for him, but I wasn't really sure on what washing. I think it's washing. Yeah. I'm not really sure what the connection. I wasn't really understanding that connection, but apparently he.
He was one of the angel investors that originally invested in the company.
Yeah, he was.
Washington wasn't negotiating for him. I mean,
He was negotiating for him with
you can
this.
say that. You can say
Shields,
that.
yeah,
He's negotiating.
Washington had a relationship with Shields long before that. So it's like hiring Shields' best friend to negotiate on your behalf. That doesn't.
They didn't necessarily jive, but he trusted her to be that way. So I'm kind of like in his position. It's like, oh, she's a trusted resource, and it's like, but even still, the deal kind of sucked. Like, that was my thing. Is I was leaning towards him keeping the company, but I think the Shields deal sucked. I think co-founder is insulting.
Yeah.
And he's trying to make it out. He's playing hardball. He's trying to make it out to be that he's the only person out there qualified to be a CEO at this particular company. And I think
which is what you're going to do if you're trying to sell yourself on it. I think that's perfectly fine.
I get what you're saying.
I'm the best one for the job. You're not going to find any better than me.
Yeah,
I think that's what you want to do when you go sell yourself.
I would tell him to go up the creek. No, thank you.
No, I agree. I agree. I'm just saying that I don't see that on Shields' side. But yes, if I were in Kozman's shoes, I would have done the same.
Yeah. So, I mean, I think he should keep the company just because I think if he's just looking for cash, then there's ways to get him money or whatever it is so that he can do what he needs to do. But even after the first or second, I think it was after the first round, with just doubling the price, which I think a new company that's fairly reasonable, he's already at the 4 million, and then the next time it's 1.5 times the price, and he's at like 6 million. And on a not so good, like if it only increased by a quarter, like 25%, he's still making like $2 or $3 million. So I get if he sells his shares. Yeah. So if he's just looking for money, I think he should hold out. But most definitely, both deals kind of suck. Like, let's be real.
Yeah.
I didn't really like Shields. I think if he was going to get a CEO and he wanted to stay, Shields was a bad deal. Co-founder status is insulting, so no. And then he's got he's not getting 50% of the company. I'm just going to tell you right now. Those two parts for me were contention, but I was leaning towards a CEO.
Yeah. Just the other thing is, we continue. I just have a quick question for Christian. Christian, would you vote yes or no?
I definitely wouldn't take the deal. If it was between accepting Shields or taking the $4 million, I would accept Shields simply because the return would be higher. I mean, they mentioned, and I don't think anybody else mentioned this, but they mentioned that there were several $300 million sales in the exact same industry with leading companies. So if Shields and Kozman as a team can get it up to that point, which they did historically, then their takeaway, even at 25% between the both of them, and there weren't any numbers governing that, but I would assume they didn't lose more than 20%, 15, 20% of the company. And even that is a large amount of money, a lot more than the $4 million that he was promised by Turner.
Okay. So what were you saying, Patrick?
I don't remember.
Okay. Well,
I'm trying to think what it was. Where were we?
We were deciding if he should take the deal or not.
No, it was something about Shields. I don't know. No.
I was just talking about Shields, the co-founder, and then 50% of the company. That's my points of contention.
Oh, yeah. Well, ultimately, didn't it end up being 60-40? But then
he sold and he got 40% anyways.
Yeah, that's what I'm saying. He should have. I think that should have been built in also, that when the company, if we do more funding, that
I just want to put out there,
we're gonna split the I mean, part of the shares that we sell are going to come from you.
Yeah.
You know?
I
mean, because he wants to, he wants to have that ownership, but he doesn't want any of the, have to give up anything when the company takes on more capital, you know? I mean, that.
Yeah. Did you read KC?
Yeah.
Oh, dude, that made me mad. I was like, I knew it. This guy, I was like, oh, I got so mad.
Yeah. Yeah.
Have you seen Tucker, A Man in His Dreams, or something like that? It's about the Tucker car.
I saw your post though about it. No.
Okay. Anyway, so essentially what happened is he was just kind of a visionary, and he built this car that had a lot of the, and this was right at the end of World War II.
Mm-hmm.
And he put in a lot of safety features into this vehicle that like most modern cars have now. Like Mercedes was like, oh, it's a visionary thing. When you turn the wheel, the lights actually turn, so you don't miss. And he was doing that stuff back then. This was kind of the heyday for Detroit, and so they were really powerful. And so he bought this factory, and they were like, I think part of the funding was like, hey, you have to bring in a CEO. So he brings in a CEO. Well, in the contract for the CEO, he essentially turns over the company, control of the company to the CEO, and they redesign the car and they redo everything. And he's like, he got really upset, and so he ended up basically going behind the CEO's back and then like trying to run the company anyways. And then what ended up happening is they sued and brought out of it the U.S. government. Yeah. To say that he was never intending to fulfill the agreements of the loan that they gave him. It ended up taking the company, but I mean, he still, saved his morals. So I think that case is very similar to what's happening now. Is he's like, he really believed in the product, but he just didn't know how to run the company, or really wasn't interested in it. And when those people start just hiring more people like them, they take away the vision that he's trying to put into the company, and then he gets kicked out. And that's what Barr was trying to do.
So, real quick.
Yeah, go ahead.
Jose, what's the next item that we have to knock off the list real quick? Because I know you and I only have 40 minutes or so.
Sure. Yeah, in this case, I wanted to ask you something about that. Well, TJ, you were saying something pretty interesting, but before we move on and ask you that question I had for you, I was thinking about how much money will Duke receive. I know, Christian, you said that we didn't have, that much information. The only information I found is that the angel investors actually invested $300,000, $100,000 each. So if we go through this, if we go through the specific questions, because it says, as a group, realize that is it likely that nobody had a fully correct answer to this question? But here are some hints. Since half of the buyout offer is in cash, you need to treat it as cash sale and give the investors 2 times their investment in cash. So if we talk about $300,000, should that be $600,000?
Yeah, their total investment then would be $600,000 in the company.
Okay, and then it says since half of the buyout offer is in preferred stock, you need to treat that portion of the buyout as stock and give investors 25% of the proceeds from the preferred shares. So did you do that calculation, any of you? Patrick, TJ?
No, I didn't.
Because why don't we try just to figure out how much that would be? Because we're talking about $2 million in preferred stock, right?
Yeah, it's $2 million in preferred stock, but then he's getting $2 million in cash. But I thought he was, getting this deal before he even had investors. So he had 100% of the company, so he didn't owe anybody.
He had some investors.
Yeah, they still invest. I believe what Josue was saying is they actually invested $300,000 in cash by the time he got this offer. He had already built YieldX. I mean, he couldn't have built it for free. So
yeah, well, Washing was one of the investors initially.
Yeah. Yeah, and I think to answer the question of TJ that you had previously, TJ, I think Cosman was, let's say, very grateful to Washington, because Washington had basically educated him, as it says in the case, you know, and all of this matter about creating the company and making this a big deal. So I think he was grateful with them, and that's why he was really taking into account his opinion and everything he was saying. And you know, in the end, Washington was always there for him because he saw the potential that this project had, right? So that's why he was very interested and always listening to what Washington was saying. But yeah, I also think that one of the angel investors, it doesn't specify that, but I think one of the angel investors was also Washington. Considering he also got the other two angel investors. And well, he needed to give some, that was part of the deal, right? That he has to give the investors part of the investment in cash. And I think here, now that we have this hint, it says two times. So I was just trying to make the numbers in this case.
It's 2.9 million.
Oh, you got it?
Yeah, so if they're saying 300, so that's 6, because they got to double that. So it's 600, which that puts them 1.4 for the cash end of it. And
okay.
Then for the preferred stock, it says you have to give him 25% of that. So he keeps 75, which is 1.5. So it's $2.9 million that he actually receives.
Yeah, 1.4 plus 1.5, right?
Correct.
And then 2.9. So yeah, it says this.
Which even still, like, okay, he gets 2.9. That just means that if he stays with the company, that he's gonna he stands to actually make more money if he sells his portions. Yeah,
that is right. Before you came in, we were just discussing if 2.9. I mean, what would you do with? We were talking about 2 or 2.5, but now we come to a conclusion that it's 2.9. Do you think that would be enough to? Well, you were saying that yes, right?
It's too low. I can understand why he would, but I think if he's just like, oh, I just need money. If he holds out for the second or even the third round, he'll stand to make more than 2.9. Well, I sent out the Excel, and it's actually the homework or the assignment, and then I added a tab that said group assignment, so I've got kind of all my numbers there. But I'll share the screen if you guys don't have it. I emailed it to you.
Okay.
So this is kind of what wrong way. This is kind of where I got. So this is, you know, his initial investment.
But that is for HomePlate.
Oh, right? That's for the other one. I'm sorry. You're right. That's for the other one. I lied. I thought I had it somewhere. Hang on. Anyways, it turned out. Oh, that's where I put it. I'm sorry. I remember.
But I think we also have to take into account too that he said that his assets would double overnight. So then maybe we can assume that he has already $2 to $3 million. And if that was the case, then yeah, I'd sell. If I already had $2 million in the bank or $3 million in the bank, I probably would sell. But I'm not going to try and, because after that I would assume he's trying to retire or at least spend a solid amount of time with his family. I mean, why else would you sell a major company that you've created if not to spend time with your family? So if I could get $6 million to survive on, then yeah, I think I'd be okay with that. But
well, see, if you look at my screen here, so the left side is what they had in the homework where it doubled. The stock price is doubled, so it's from 50 from the first investment to 2, and then to 1.5. So if he just held on to it and just stayed through investment series, he would get, selling his shares, he would get $6 million. And they were saying, oh, that's fairly not conservative, but aggressive. And then I said, okay, if the growth is only 1.25, 25% increase, after the third series, he's already making more than 2.9. He's close after the first series. And I feel like 25% growth is fairly low for a new company. Like that's really low, if you ask me. So if he just he's like, okay, fine, he gets to see, he goes with the crappy deal that Shields gives him, where it's 50-50, and he's a co-founder. Dude, if he just holds on to it and then sells his shares after the investment series, he stands to make a lot more money. So that was kind of my 2 cents. Was like, no, even if he's looking for money, just hold out a little bit and you're going to get significantly more.
Well, I think for him, who has not run a business, a lot of this is very unknown. And he's looking at it. He's just, when turning over ownership of a company, basically, or all the runnings of it to Shields, I think there's a ton of risk for him, that he just, there's a lot of unknowns for him.
But that's my point, is let's just say you're a consultant talking to him, what would you advise him? And I think that's kind of the point I'm coming at it. It's like, I would tell him, hey man, even if you go with the crappy deal with Shields, which, I wouldn't, but even if you go with that crappy deal, if you hold out and not sell now, you're stand to make a lot more money even if it goes crappy. Like I said, this is a crappy one. Like, let's just say, it doubles on the first round. He's like just doubling on the first round. He gets $4 million instead of the 2.9 that he would need to get anyways. And then, and then after the second one, he's at 5, and that was, let's just say 1.5. It's like, even though he's getting less shares or, less percentage of the company is worth so much more. So he stands to make a lot more money if he just sells out and just done with it. He's like, I solved my problem. I hope it helps. And I'm tired of dealing with these, corporate hoo-has. He still stands to make a good amount of money, even if it goes not so great at 25% increase. You know what I mean?
Yeah. So it is clear that if he goes with, not with Turn, but with the other option to continue and make the company, go with Shields, let's say. So you're saying, and it is clear that he would have more money than just taking the Turn offer, right? So, but the thing is this.
That's what his focus is. That was my only thing, is if money was his focus, selling the company is not the best option.
And did you try to do something? I'm just, because I see that you did all this pretty good. I like your spreadsheet. Did you try to use something? With the comment you put on the discussion board about the ownership you would give to Shields?
I think I did. I think I was like, I would counteroffer with no co-founder and 25%, just because he came in with a ridiculous offer, and I'm going to come back and lowball the crap out of him. And if it pisses him off, good, go somewhere else. Anyways, I'm sorry. The Shields deal really made me mad. I was like, no, because he was trying to build this air of, oh, this is the only person for you, and Kozman is just kind of believing that, like, well, it's this, or I've got to sell. I'm like, you've got more options.
That was the question I had for you, because you were talking about the case B, right? When it came to the CEO problem, I think Kozman would deserve that, because he doesn't want to run a company. I don't know if he doesn't want to run the company, he doesn't like that, or basically he doesn't know how to do that.
I just think that he knows, for the best of the company, he needs a CEO. He needs someone else to kind of go in and know the technical side of it, and then still know the business side of it, because he really wants to get this product out for the betterment of people, but he's not exactly sure how that should be done. And I agree that I don't know if he's necessarily the person to do that. I mean, if you look at Apple, you had, Jobs and Wozniak. Wozniak is really the technical genius of Apple. To be real, he's the one that actually had the programs and was building things in his garage. And then Steve Jobs just happens to be really good at that. Don't get me wrong; he's still a very good technical genius on that side of it. But what really made that pairing awesome is that Jobs can talk. Jobs knows the design aspect of it and the way to sell things. He's the marketer. So that's what makes that pairing great, and I think that's what Kozman is missing. Kozman is the Wozniak. He figured out this problem no one else could figure out, but he needs someone to market it and actually make this company.
Yeah. Well, and I mean, looking at it even further, I was just looking at this. I mean, he did say in there that he and his family would be set if they sold. Okay, that's one. And he said he would multiply his net worth overnight. I don't know if that means double, but
a lot.
Yeah, exactly. And so with that, he also would be, after everything, he would have himself 1.5 million of stock in the new company. Now, YieldX still grows. They sell YieldX. He still benefits because through that stock that he owns, that 1.5 million of stock, that's going to grow significantly by the growth of YieldX.
Yeah, but I mean, you're trading one gamble for another, and at least you have the numbers. At least you have the numbers for YieldX when it's your company. You know what I mean? And that I don't disagree with you.
What do you mean you have the number? What do you mean you have the numbers? You didn't. There were very little numbers that you had. I mean, you don't.
Quick question.
Sure.
So we've been on this one question for quite a while. Has anybody looked at the group assignment?
Yes.
So how does that work? Do we go ahead and figure those questions out, or we do them on our own and send them to Josue, or do them individually and send it in individually? What's up with this?
You mean with what we need to complete with Lexi needs $50,000 to get the next milestone? That one?
Yeah.
That was the one I sent to everybody with the group assignment. That's what I kind of did that a little Excel spreadsheet on.
Oh, so we figure it's already done then?
Well, I mean, take a look at it, see if I did it right. Here, I'll share it, but I sent it out in the email as an attachment, I think.
Yeah, I can just work that out and submit it. That's actually for the whole group. I mean, I think one submit that, and then everybody would have to say.
Okay, I just didn't want to put the pressure on any one person if they didn't, if it hasn't already been done.
Yeah, I forgot the exact parameters of it, but yeah, it was just trying to figure out her worth pre and post investment. So I did the worth pre and post here. Here's the pre and post value. Anyways, so I mean, I kind of figured it out, and I forgot exactly what they were asking for, but I feel like I'm pretty sure all the answers are in here.
Yeah, don't worry. I will make sure to submit that before it's due. Thank you, TJ, and thank you, Christian, for bringing that out. Well, just to finish the discussion, I mean the YieldX discussion, we can just discuss the last question. I think we already talked about this just a little bit, but I just want to make sure what everyone thinks shortly about what if Duke can use the turn offer to his advantage if he rejects it.
If he can use it to his advantage. Well, I guess that would be a relative approximation of the valuation of his company, right? So, I mean, when you're offered $4 million for your company, you could use that as an advantage in the next round of funding. Say, hey, look, I got a liquid offer for the company. I'm not willing to take it, but I know that the company is worth this much.
Okay, so do you think he could ask for more?
Oh, definitely. Definitely. I think his share prices would go up dramatically. I mean, if he only accepted $300,000 cash and he was able to build a $4 million company, that looks really good for investors. I think he could definitely leverage that to get a lot more money in the future.
Okay, what do you think, Patrick and TJ?
I'm taking a look at it real quick.
I mean, if my thought is, if you feel that it's worth that, if it is worth that, then, I mean, yes, you could use that. I think it sounds like was thinking maybe as higher, worth more than that.
Yeah,
I mean,
go ahead. Sorry.
yeah.
Yeah. So this is if washing or wash whatever is
Washing. I could
put in washing.
Yeah.
Put in that he's one of the angel investors, the 175.
Yeah, he's one of the original angels.
Okay, so yeah. Wait, there's washing. I'm sorry. Hang on. Oh yeah. Washing stands to make a ton more money.
I think there's just a conflict of interest with the way everything is going there. I mean, the relationships and everything. I think Kosman should have been really leery of what was going on.
Yeah. So Washing put in, what is it?
$100 grand with an option to increase it to 167 or something like that.
Yeah. So if he sells, then he's going to get 200 grand, right?
Mm-hmm.
Because he's got to double his investment.
Yeah.
Well, on 25%, which is a low growth rate, but so at 25, he's just under 200 on the first investment round. Series C, he's making 240. So, and that's low investment. Like that's low growth. So let's just say.
Well, after that, he was part of that sequel company too. He was part of the, and that's it. He brought in his own venture capital company that came in as well. So he stands
to make a lot.
Yeah, because he has that. At first, it was just his own personal money.
Yeah, so he stands to make 3 and 4 times his money.
Yeah.
If he doesn't sell. So that's what he gains on that. So what is it? What does Washing want from? Why does he want to return it? Because he's not going to get as much money. What's his return on investment? If it's the 2 in the first series and then 1.5 growth on series B and C, he's going to make like 400 something, and that's just on his shares.
Yeah. So he'd only make what, 340 in cash, and then maybe 8% of the stock.
So yeah,
with the sale.
Yeah. So he's not making as much there, so that's why he would do that.
Of course, yeah, it's not in his best interest for the company to sell. And that's where I'm saying that they needed someone that was not involved Kosman needed someone not involved that did not have that conflict to be advising him. You can't ask an investor who's stands to make more one way to be objective and give you good advice.
Yeah. I don't disagree. I totally, yeah.
I mean, and that's where.
Yeah. And that's where I feel like he was getting pigeonholed into. You have these 2 choices. And you're like, no.
Yeah.
No, you don't.
Yeah.
Okay. Thank you, Patrick and TJ, for your answers. Well, just the last thing. Well, we haven't discussed anything about home plate. Right here in the discussion instructions, we are required to share with the group the answers to the questions. I would like to show you what I did.
Okay.
Let me, if you have your spreadsheet open, we can just compare, and you can tell me if I just did it correct or not. Let me see. Let me show you my capitalization table. Let me know when you see it. Okay, do you see my screen?
Yep.
Okay, so I was doing like 1A, 1B, following the specific instructions, 2, 3, 4. I just did it this way because I was just trying to get the answers.
Mhm.
But this is what I got. Basically, I tried to do this with the formulas to make sure I was getting the right answer and how many shares. Lexi,
So
what's going?
the only problem with this is, so in like, it says first round of investment, that $1,000 from the founder, it doesn't count in your investment total anymore. So that goes away. And then on the seed round, so the second round for answer 3, again, that $1,000 and then the 500 goes away because that was already
Okay.
invested in the previous.
Yeah, but I looked at, I would have changed that to equity. That's what I did. And that should have, the price per share should have gone up to 50 cents because she still owns the 100,000 shares. It should have been, price per share could have gone up to 50. And so I would put equity instead of investment because that's going to.
No, that's what percent ownership you're supposed to be. Is supposed to be your equity.
Well, yes, but you have cash equity also.
Right. But you don't want to confuse those two because in the capital, what is it? In the example they give, they do total investment so that you don't confuse what kind of equity you're talking about. It's usually ownership equity and then equity for the company. And at this point, they're kind of the same. You know what I mean? Because the company's so small, it's not super delineated. But I totally get what you're saying.
Well, with what you're saying though, you would still count that $1,000 as investment.
Not in this the round of investment. The $1,000 was the initial founder capitalization. The $1,000 doesn't roll
basically
over.
Yeah,
it doesn't roll over to each round. So because this round of investment, the round 1, he's only she's only getting 50,000.
Yeah.
She's not getting 51. She didn't invest another $1,000.
Okay. Yeah, I just left it that way because I was just copying and pasting the first chart. But yeah, you're right. Yeah, in the case of the seed round investment, well, number 3, as you're seeing here, I just wanted to make sure that I had the numbers right for the angel investor. If the share price was $1 and also $2.50, the one I wanted to make sure of was also the convertible debt, because since there was a 10% that had to be discounted over here, well, the total amount I got was $2.25 per share. Is that the answer you get on the convertible debt for the angel investor?
I don't understand the question there. What do you mean 225? Oh, I got 250.
I had 250.
But yeah, I typed in 250. Oh yeah. So
let me show you what I did. Do you see my Word document here?
Yeah. So yeah, it's a little confusing because you keep adding the founders and investments from the previous round. So the issue here is, so in the convertible debt, it's more than 50 because you've got a discount rate of 10%. So it's actually 50,000 times 0.9 times that 90%, and that actually gets you like $55,556 ish. So that's how much they're getting to spend, and then they get the same rate that investor is coming. So if it's 250 for this investor, the convertible debt is at 250 as well.
Yeah, the reason why, well, I will tell you why I did it this way. Actually, I don't know if you were able to read, what was it? Well, the capitalization table and valuation, pre-money and post-money, that is specific document that the instructor sent us. I mean, the way the capitalization table was made there was the same way I just did it. I mean, and it was including the first investment that the founder made on every capitalization table. So that's why I did it that way.
That's true. It was. This is the exact way it was on there.
Oh, it was the other case. I think it was the YieldX case because I did. Yeah.
So that's why I actually put on my answer that considering that the angel investor will get a 10% on his share price lower than the Series A investors, that would leave $2.25 price per share for the angel investor, and that's why I put it right here. Just I mean, if we take that off, the price that the investors were making on round A times 90%, right, which was discounting the 10% that it's talking about there. So that's why it goes to 225, which is 10% less than what they were paying, right?
No, it's not it's 10% more money to invest at the same rate. The rate stays the same. The 10%.
No, the discount. He's right. The discount. You get a discount on the purchase price, which is the $250. So you get a 10% discount on that. So your money goes further with it. You buy more shares. Because I have that. I have the 22,222. I put the price per share there, but then one of my calculations, I have the 0.9. But that is correct. I know we saw that in there, or in the video even.
Yeah.
You discount the price of the shares.
Okay.
Yeah.
So hang on. Go ahead and stop sharing. I want to show you something real quick.
Sure.
So this is straight out of which one is this? So yeah, this is the funding document.
Mm-hmm.
So this is the capitalization table, and see how the first round of investment, the initial the founder's investment doesn't carry over, and that was what I was saying. So it doesn't show that it carries over to each round, and that's all I was saying, because the founder didn't invest another 20,000, and the rate doesn't matter anymore here because they already have it. Does that make sense?
Yeah.
Well, each time they don't. Yes, each time the investment.
Okay, and that's all I was saying. So you were saying, oh, it's not in the capitalization table. I was like, well, it literally. I guess we're talking about two different things. So that's all I was pointing out.
Okay.
But I don't think it changes the equity at all. I think Jose's equity was correct. So in that,
I didn't even look at the equity, honestly.
Well, except that you increased. See, I didn't increase the number of shares. Are we saying that Lexi was maintaining the 100,000 the whole time through?
Yeah.
Up top it's specified, but as we went on, it wasn't specifying that anymore. So I didn't.
Yeah, actually, she did, because it said that she wanted to retain the number of shares she had.
At one point, but in the next scenario, it didn't say that though, and that's where I went with what it said. I didn't keep adding. It didn't say that she always wanted to. So that was not my understanding of it. I mean, I could see how that may be, but at that point, I didn't. Like for the convertible, I did not keep her at 100,000. So.
Okay. Well, I let me see.
Because really, once you have investors, I mean, just adding the shares, you really.
I think
they need to have the same amount when you increase. If you're increasing, they should still have the 22% of the ownership or whatever. If you add Otherwise, yeah, if I'm just creating new shares and giving them to me, I could double the shares, give it all to me, and now that person owns way less of the company. I mean, that's...
I don't think that's legal.
Yeah,
No, it's not, and that's what I'm saying. That's what we're doing here. If you're adding without bumping up
you can create an infinite amount of shares of a company.
I understand.
It dilutes the cost.
But you can't create them and give them to yourself.
Yeah.
No.
So
every company would do that, and the stockholders would be screwed.
I think what we're running into is it doesn't say, right? It doesn't say.
Well, correct. So it does. But I'm saying if you did that, you're screwing the stockholders, and that would be there would be some legal issues there. If a company just started creating stock and handing it over to the owner when you had shareholders. If you don't have any shareholders, that's one thing. And that's why at the very beginning, when she split them and then she sold. But once you have the one, you can't really do that.
What did she split? I'm sorry.
At the beginning, she started out with 100,000 shares. And then when she took on the Angel, it said she still wanted to maintain 100,000. So she doubled it. So now there's 200,000 shares. She could do that because there was no one else. But now that she has herself and the Angel, she can't just add another 100,000 to give herself now 200,000 in the
you add 100
Angel 100 because now you just diluted their ownership from 50% to 33%, and she benefited from the difference. Like I said, you could always create that. I could make it so I have 99 and the other person has 1% if that's what we're going to do.
Yeah, well, and I think that's part of the issue, and that's part of the point. Is she was looking at numbers of shares instead of percent, and that's the issue. If they bought a number of shares and not a percentage, then I don't know what the legal ramifications or what you're legally obligated to do at that point. Because I think that's where we're getting is what can you actually do? But I think you're right, and that's what how I understand it, that's what she's doing. Is she's just creating more shares.
Hey, I'm sorry for interrupting, but the teacher, Sister McGill, just replied to the discussion, and I think she wants to join. Well, I mean, she's asking, do you mind if I share with the... Oh, I'm sorry. Never mind. She's saying, do you mind if I share with the rest of the class for the preparatory discussion? Never mind. Continue, TJ. I thought she wanted to join.
Oh, is she talking about sharing the discussion?
Yeah, that's right. I'm sorry.
So Josue, don't you have to leave soon?
Yeah, actually, yes, at 10. I have another meeting.
Yeah, I actually have to go as well. But I think we covered all of the questions. Yeah, all the discussion prompts. So I think we're good.
I don't know if there's something else pretty quick that you want to tell before we go, because I actually have to be on time for the other meeting too.
I think we hit everything.
Okay, good. So do we have to do a closing prayer? We're done, right?
Done.
Okay. Well, I really appreciate your time, guys. It's been a pleasure, and I think we'll see you next week. I will submit the discussion group assignment. I mean the group assignment.
Okay.
So thank you for your time.
Okay. Thank you.
Bye-bye.